All right, let's dive right in. Today, we are unpacking what might just be the single biggest bet in corporate history, Microsoft's all-in gamble on artificial intelligence. The numbers here are just mind-boggling. The risks are very, very real. And honestly, the outcome could reshape the entire tech world for decades. So let's get into it. Okay, so to really get your head around the scale of this bet, you first have to understand the scale of Microsoft itself. We're talking about a company with a market cap of over $3 trillion. As of right now, that makes it the most valuable company on the entire planet. This isn't just a tech giant, it's an economic force of nature. But here's where things get kind of wild. The company is on pace to spend over $120 billion this year alone, and most of that is going straight into building AI data centers. I mean, that is an amount of money that's hard to even comprehend, and it brings up a massive question. Is this it? Is this the largest, most expensive gamble a single company has ever made? That's what we're going to explore. We're going to look at the incredible, almost unfair advantages Microsoft is bringing to the table, but also the very real cracks that are starting to show in its armor. So let's start with the bull case, right? If the future of tech is a high-stakes poker game, you could argue that Microsoft is sitting at the table holding an almost unbeatable hand. Let's break down the four aces they're playing with. We're talking about just sheer financial firepower, the absolute dominance of its Azure cloud platform, that game-changing partnership with OpenAI, and an enterprise ecosystem that, frankly, is the envy of the entire industry. Any one of these is a huge advantage. All of them together, it looks unstoppable. First up, let's talk about the money. Microsoft just became the first company in history to clear over $100 billion in net income in a single year. That's pure profit. This incredible financial strength is exactly what lets them go on that $120 billion spending spree without even breaking a sweat. And all that cash is being pumped into their cloud platform Azure, which grew by a whopping 39%. But look at this chart. A full third of that growth, that's 13 percentage points, came directly from AI services. For Azure, AI isn't some future idea, it is the engine driving its growth right now. And of course, you can't even talk about Microsoft's AI strategy without mentioning what might be the single greatest corporate investment of all time. Their $13 billion bet on OpenAI has just exploded in value, giving them a 17.5 times return. But it's more than just the money. It gives them front-of-the-line access to the most advanced AI models in the world. And this right here, this is their ultimate weapon, the enterprise moat. With 450 million paying Microsoft 365 users and 320 million people logging into Teams every single day, they have a gigantic captive audience to sell their new AI tools to. Once your company is locked into this ecosystem, it is incredibly hard to get out. So, sounds like an unbeatable hand, right? Well, not so fast, because despite all those incredible strengths, there are some really serious challenges and risks that could unravel this entire multi-trillion-dollar bet. Let's flip the coin and look at the other side. And this is probably the single biggest problem they have right now. For all the hype around AI, the adoption of their flagship AI product, Microsoft 365 Copilot, has been, well, shockingly low. Out of those 450 million potential users, just 3.3% are actually paying for it. It really makes you wonder, are businesses seeing enough value to justify the price tag? And what makes it worse is that it's not just a slow start, they're actually losing ground to their biggest rival. This chart shows that in the race for paid AI subscribers, Google's Gemini has quietly taken the lead from Microsoft Copilot. It's a pretty clear sign that the fight for the actual end user is far from over. And hey, remember that massive spending we talked about? Well, this number, $37.5 billion, that was their capital expenditure in just one quarter. The spending is happening right now at a blistering pace, but the revenue to justify it? That is still a huge question mark. This is the exact question that investors and analysts are starting to ask, and the volume is getting turned up every single quarter. Microsoft simply cannot keep spending at this rate forever without seeing a much, much bigger payoff on the top line. The clock is ticking. And as if all that competitive and financial pressure wasn't enough, now the government is getting involved. The FTC has launched its biggest antitrust investigation into Microsoft in decades. They're looking at everything from the OpenAI partnership to how they bundle their AI tools, which, remember, is their core strategic advantage. So yeah, the picture is pretty complicated. But Microsoft isn't just sitting back and waiting. They have a very clear strategy to tackle these challenges and turn this huge gamble into a decisive win. Let's take a look at their game plan.
Okay, first, let's go back to the Azure cloud for a second. It turns out Microsoft has an $80 billion backlog of signed customer contracts that it literally cannot fulfill right now because they don't have enough data center capacity. So this isn't some theoretical demand, this is guaranteed future revenue just waiting for them to flip the switch.
And what about that Copilot adoption problem? Well, they're changing the rules of the game. Instead of just trying to sell Copilot as an expensive add-on, they're launching a whole new premium subscription tier called E7. This will bundle Copilot with their other high-end enterprise tools, which should drive adoption and boost revenue per user at the exact same time. It's a really clever move. And while everyone is laser-focused on AI, Microsoft's other business software, Dynamics 365, has quietly become a monster. It's growing at 19% a year and is stealing market share from giants like Salesforce and Oracle. It's another powerful growth engine just humming along in the background. So, where does all this leave us? Well, Microsoft is a company with incredible strengths, but it's also facing enormous, company-defining risks. The final verdict on this historic AI bet is still very much up in the air. So, it really all boils down to this. The bulls will point to that $80 billion Azure backlog, the 450 million M365 users, and that golden OpenAI stake. But the bears will point right back at the weak Copilot adoption, the rise of Google Gemini, and the looming threat of an FTC crackdown. Both sides have a really compelling argument.
And the good news is we don't have to wait long for the next big clue. On April 29th, Microsoft reports its quarterly earnings. And when they do, these are the 5 things you need to watch. Does Azure's AI growth accelerate? Does Copilot adoption finally start to pick up? Does the massive spending continue? What are the early signs for that new E7 bundle? And are they changing their strategy at all because of the FTC?
So this upcoming earnings report really is a critical test. Will this be the moment that this massive historic bet finally starts to show a real payoff? Or will the doubts about the cost and the competition just grow even louder? All eyes are going to be on those numbers.